Good morning to everyone. Welcome to the Morning Kappa at 8 on a Wednesday. I'm here to present the Midweek Futures Traders Technical Brief, and we're on week 2, June 2026. Let's bring our attention to the table here. And this is one which we show all the popular products traded by traders. And as we can probably observe here on the last column, that many of the products that we are covering here has either turned negative or trading in neutral. This was prepared last evening, and as we monitor the current situation, some of it which are already in the neutral setup is already looking into some momentum on the downside. In particular, the US indices, and we have seen in the previous week that the sentiment was driven very much on the downside, and news that is coming through has also been less positive for the US indices. The other one that we have noticed is the agriculture, the corn, the soybean oil, and also the soybean, which have all been on a negative momentum. And currently, corn and soybean is on neutral. Soybean in particular, which we're going to cover later, is very much in the negative territory. For metals, we also have seen a sell down, and it's moved back into some sort of a neutral position, but that's also being challenged. For Asian markets, we are covering Hang Seng and also China, and both these indices also have shown very negative implications. For palm oil, we are on neutral, and for our FKLI, it's also looking on more of the negative side. So this is the palm oil, whereby we see that a neutral position is being formed even as we enter the month of June. And we have seen that the markets have played down expectations of a steeper than anticipated drop in Malaysian palm oil production in May, a softer ringgit, and also recovery in energy prices. Persistent uncertainty over Indonesia P50 diesel blending also has risk of aggressive Indonesian cash market selling ahead of its new export system, which will be rolled out, and limiting sustained recovery in Malaysian palm oil prices. So by right, June month, in the past, it's always been trading more neutral, and it's no surprise that we are seeing this pattern as well. Moving ahead, we look at the commitment of traders for US indices, and in particular, we want to see that from the point of view of the Nasdaq, whereby we have observed that currently hedges have unwound, and they have now moved on to selling the cash market, and this is very profound in the recent performances that we have seen in the past few days for the Nasdaq. So what has been impacting this is basically non-farm payrolls has jumped seasonally to 172,000 in May, and this is way higher than consensus of 80,000. Such a hot job report, along with higher inflation, has fueled bets that the Fed will raise interest rates coming in the months ahead. So this is something which we'll be watching, and highly anticipated that if this happens, the US markets may take a deeper correction. We look into commitment of traders for agriculture. We're going to cover soybean. Soybean has been on a downtrend for much of the couple of 4 weeks. But in particular, we see that this may not be the bottom. And as reflected in the chart here, it has recently broken a support level, which is now trading consistently below it. So why has this happened? Because the favorable weather in the US, especially the Midwest, and also the absence of fresh buying from China has a weigh on the market itself. So what we are looking at is possibly the next support level will be at the 1040 level, which is about 40 points away. And for this, we are calling a negative on the chart setup. We see that the current price of 1,113.5 has a potential of rebound to a reference price of 1,133. And we look at the potential profit of 1,107 and a cut loss of 1,147. And the other one that we are going to highlight is the energy. And in particular, it's going to be the natural gas, because natural gas in the month of June usually has got a potential of some upside. So if we look at what natural gas is doing here, there is a lot of hedging that's been going on, increasing a shorts of 12,000 as compared to May 26. So if we observe the chart that we are showing here, indeed there has been a potential support that has formed here. And the news, as mentioned, is basically the US weather forecast to milder conditions in the second half of June, which has brought the current correction to this support level. And looking ahead, forecasters also have shifted cooler weather in the eastern part of the US for 13 to the 17, and also for forecast June 18 to the 22nd, it's also going to be cooler. But we are entering summer months, and for sure, temperatures are going to rise as we go into the later part of June and also the early part of July. So there is a requirement for air conditioning, and that would also pump up the usage of natural gas. So we are seeing, after a potential correction, the prices will go back to a level nearer to the previous resistance. So for this, we have got a positive setup. Current price, as mentioned, is at 3.13, and we do have a reference price of 3.06. So the potential profit price is above the 3.3. That would give us a potential of a value of 240 US dollar. And if this all goes strong, it will have a cut loss of 2.98, and giving us a loss of a potential USD 80 US dollar. So we want to bring to you the attention of our car campaign, and we are riding on the slogan of building a better future through every trade. So every trade that you do through RHB, you are entitled to participate in this campaign, whereby you have a opportunity to win a Tesla Y, or we also have the supplementary prizes every single month of a iPhone 17. So this is all I have for this morning. I will pass on to the next speaker. Over to you, Joseph.
Right, morning everyone. Thank you, Vincent, for the midweek futures update. So as we can see right now, yesterday the Hang Seng continued to move lower, but it managed to stage a rebound at this 24,500 point level. Despite that, we can see that the Hang Seng clearly has been moving on lower highs with lower low. Right, I'll set our stop loss at 26,600 point level. Okay, and this morning, we just learned that the U.S. have resumed their conflict with the Iran. According to the posting by Donald Trump, right? Once U.S. Helicopters been shot down by someone near the Strait of Hormuz, and the U.S. is going to have reciprocal actions on this, right? And the US have launched a few bombs on the one of the island at the Hormuz Straits. But at the crude oil price, the crude oil price just make a mild rebound this morning, did not jump higher above $100 per barrels. So I think that the market is still wait and see whether the conflict will be uh, extended to a bigger regions, and at this juncture, right, very strong resistance remain at 107, right? And you can see that for the crude oil for the past 2.5 months, there were two occasions that were gap down near the high near the 107 level, right? So this 107 to $100 this band has become a very strong resistance for the WTI. And right now, WTI is trading below the 50 days moving average. Hence, with today, this morning news that the US have resumed the kind of conflict with the Iran, right? This is a very good opportunity for us to look at the crude oil. Should the crude oil go below to 90 level and below, then on that will reaffirm our view that the current setup is bearish, right? And the crude oil will be likelihood trending lower towards 85 and 80. Now, on the other hand, if these conflicts have been escalated, right, a break above 107, I will send the crude into a higher level. Right? So I think uh, this week and next week is a very good opportunities for us to trade on the crude oil. So apart from the crude oil news, right, another news that we have learned is that the SpaceX, according to the media, right, SpaceX managed to receive bids of 250 billion. They are looking to raise about 75 billion, so about 4 times of their size have received so far. The IPO is going to close on today, Wednesday. Then on they're going to have a pricing on Thursday. They're going to list on coming Friday, right? So now while the tech stocks is actually pulling moving downwards right now, right? I think we can actually look at the uh, banking stocks in the US market. So looking at the Citigroup, I can see that Citigroup have about to break past their resistance at 135 US dollar. So a breakout of Citigroup at 135, it will move, lift the Citigroup towards 145 and potentially moving towards 150, right? And while the tech stocks is taking a breather, the financial stocks garnered the attentions right now. So apart from the US financial stocks, yesterday we also mentioned to look at some of the China the banking stocks, right? Start off with the Bank of China. So this morning, looking at the China A50, which is the index that track the largest 50 largest China stocks. I do see one stocks that have experiencing a very strong bullish momentum, i.e. the number 63, ZTE Corporations that lists in Shenzhen. The Chinese name is called Zhongxin Tongxun, right? And you can see that the for the past 2 weeks, the counter has been moving up on a higher high, climb above the 20 days moving average, and yesterday it break past the 39 renminbi resistance. So after a breakout, right, the ZTE likelihood to move towards 42 and followed by 45, and downside support is at 36, right? Looking at the flow, ZTE is one of the top 5 traded counter in China yesterday. Now, apart from the China, now if we're looking at the opportunities in the Hong Kong market, firstly we have Lenovo, right? Yesterday, despite that the Hang Seng have mild corrections, Lenovo was bucking the trend, testing the resistance at 26 Hong Kong dollar. So in the event that it crossed above the 26 for today, right, then on the sentiment will be improved. And Lenovo likelihood to climb towards 28.50 and followed by 31 Hong Kong dollar. Downside support is at 23 Hong Kong dollar. Then on we have the Sinotruk Hong Kong stock code 3808. It also break past the 43 Hong Kong dollar, heading towards 47 and followed by 50. Downside support will be somewhere at near the 50 days moving average, i.e. the 40 Hong Kong dollars. So we have pending breakout Lenovo and a breakout stock Sinotruk. As for the Malaysia market, we continue to stay on the bearish bias of FKLI, as well as the bearish bias on the FCPO. Meanwhile, this morning, trading stocks, we do see opportunity in Inari that break past the 2 ringgit and 25, and R1 will be 2 ringgit and 40, then on R2 will be 255. Downside support is 2 ringgit and 10 cent. Secondly, we have the SP Setia eyeing to break past their immediate resistance at 1 ringgit and 5 cents. So the breakout happened, SP Setia climbed towards 1 ringgit and 10 cents and followed by 1 ringgit and 15 cents. So downside support will be the natural level at the 1 ringgit level. So we have the Inari breakout stocks and followed by SP Setia pending breakout. Okay. So I stop here and pass on to Iftaar on the building mat quarter result wrap. Thank you.
Hi, thanks, Joseph. Good morning, everyone. We have a basic material and sector update. Yep. So, just a quick results wrap. Both press metal and Cement were in line with our estimates. And moving forward, we are expecting press metal to record another record-breaking quarter, and Cement to come in largely similar Q on Q to a slight decline. So, to start off for press metal, few highlights from the briefing the other day that are worth mentioning is that 2027's forward sales are now higher at 2009 to 2950 versus 28 to 29 previously. And secondly, management has also guided that they are looking for aluminium to continue facing a structural supply deficit of about 1 to 2 million tons in 2026. And thirdly, Pitikan is expected to come in online in early 2027. So now that we are almost at end of June, and quarter to date aluminium prices are 14% higher than first Q level at 3.6 thousand each, while alumina and carbon anode costs have increased just slightly by 1% and 5%. MJP premium, on the other hand, is at $306 per ton. This is at 11-year high. So freight costs, meanwhile, are expected to increase by 20 to 30% Q on Q. But freight costs in general only makes up about less than 10% of total cost. So this will be most likely offset by the higher MJP premium. So another thing to note is that dollar has also inched up by about 2% in 1 week. And markets are now pricing in a 72% chance of a rate hike happening according to CME Group. And should this happen, we may see dollar to continue rising. and this will be nominally positive for Pressmetal, given the fact that it's a net exporter. So based on our estimates, every 2% increase in dollar will increase Pressmetal earnings by about 5%, and this is assuming no hedging is done. Yep. So moving on to Cement is a bit straightforward in the sense that for QFY 2026, which will be the June quarter ended, will be another strong quarter, and this is mainly because of the fact that Cement still has the low-cost coal inventory from the pre-war level. So the concern is actually in FY 2027, whereby Cement has procured the stocks for first QFY 27 at about $90 per ton level. This is versus $60-ish per ton in third Q. Yeah, so assuming this continues to happen and Cement still doesn't have any plans to increase their ASPs, this might have a hit on the profitability and as well as the margins. So based on our estimates, every $10 per ton increase in coal prices will hit earnings by about 5 to 6% and lower EBIT margins by about 130 basis points. However, we still have a buy on the stock, premised mainly on the cheap valuation, whereby it currently trades at about minus 1.5 SD. Our sector, our call for the sector is still overweight. We prefer Pressmetal as our top pick with a target TP of 10 ringgit and 50 cent. Yep, so I'll stop here and I'll pass on to the next speaker. Thank you.
Good morning. Yeah, so we have Sime Darby Property note. Yesterday, the company announced that they are launching the 1.25 billion new economy venture fund, NEVF. So this fund will enable Sime having a bigger platform to accelerate its data center and other industrial and logistic developments without overburdening its balance sheet. Basically, the company can just leverage on other funding contribution from other institutions so that, they will be able to undertake more projects to be developed, which, typically are more capital intensive. So with a fund life of 5 years, we expect Simeprop to realize more sizable returns upon the closing, possibly by injecting the assets into held in a fund into the upcoming REIT. Structure as a Sharia-compliant, closed-end, discretionary investment platform, NEVF has a fund size of 1.25 billion. So main fund will be 1 billion. Sidecar is 250 million. So this sidecar will have a separate structure, for investments. The fund saw participation from EPF, Lembaga Tabung Angkatan Tentera, which is LTAT, and also Great Eastern Life Assurance. So Great Eastern is also a returning investor after joining Simeprop's the maiden fund, Industrial Development Fund, in 2022. So if you recall this, NDF basically invested in logistic warehouses which Simeprop used to JV with collaborate with Logos in the past. So now Simeprop is the general partner and also sponsor of the fund and is committing 500.1 million as a co-investor at the first close. So other respective capital commitments are 100 plus 250 million from EPF. This 250 is sidecar and 200 million from LTAT, 199.9 million from Great Eastern. So this NEVF is strategically established and will invest in both data center, built to suit to lease data center, and also industrial and logistic developments within Simeprop's projects. So in our view, the fund marks an important milestone, especially when Elmina Business Park is gaining traction, while management is also focusing on built to suit to lease model to grow its recurring income portfolio. The company is also aggressively developing other industrial parks as well, such as Bandar University Pago, Bandar Bukit Raja, and Vision Business Park in Negeri Sembilan. So, opportunities to expand the asset portfolio are actually quite significant. More and more local players and multinationals also, they are setting up storage facilities in Malaysia, and hence, and also Simeprop's positioning as an industrial player will also be benefiting from this trend. So apart from DC2, the second data center, we think this Mylin's 450 million automated warehouse will also be included in this fund. Well, the 1.25 billion fund will form the equity portion of the asset investments based on a 70 or assuming 70-30% debt equity. The fund could possibly undertake another 2.9 to 3 billion debt, so making the total fund size post leverage or total capital to be around 4.25 billion. Of course, the debt undertaking will be rather gradual, so it will be minimal in the beginning, and probably it will go higher over a period of time. So this means that the fund will be able to absorb more assets to be developed going forward. The IRR for this fund is around 10 to 15%. So we expect Simeprop to recognize land disposal gains upon injection of the relevant assets into the fund. Apart from this, the fee-based income, we expect it to be rather minimal during the lifespan of the fund. So as mentioned earlier, the really big return will happen only when, upon the exit of the fund, of the funding partners, and also, injecting the assets into the upcoming bid. So overall, we maintain our buy rating. Target price is unchanged at 2.15 ringgit. So that's all from me, and and happy trading today, and we hope to see you again at our RHB Morning Kappa at 8 tomorrow. Thank you.